All right, glad to have you back. Now, four of Nigerian leading financial institutions, United Bank for Africa, Zenith Bank, Guarantee Trust Holding Company, and Stanbic IBTC Holdings, have rewarded their shareholders with interim dividends amounting to 135.49 billion naira for the half year ended June 30, 2025. Now, the dividends payments detailed in the financial reports filed with Nigerian Exchange Limited provided relief to investors who had expressed concerns that lenders might hold back on payouts amid regulatory issues and macroeconomic uncertainties. Stanbic IBTC Holdings emerged as the highest interim dividends payer, declaring 2 naira 50 kobo per ordinary share of 50 kobo each. This translates to a total interim dividends of 39.7 billion naira, subject to appropriate withholding tax and regulatory approvals. The bank stated that shareholders whose names appear in its register of members as of Monday, October 6, 2025, would benefit from the payout. Analysts noted that Stanbic's decision underlines its strong earnings capacity and commitment to shareholders' value despite a challenging operating environment. Zenith followed too with brilliant payments. Well, my guest is Ugodre Obichuku. Let's get to this conversation. He is the CEO of Nairametrics. It's good to see you. It's good to have you live in the studio.
Same here, Tolu. About time.
Yes, thank you so much. Well, finally, CBN approved half-year reports. Yeah. We waited so long for these reports to come. But from where you see this performance, what is your opinion?
I mean, let's understand that when this central bank came about 2 years ago, one of the first things they said was they were going to adopt orthodox monetary policy. So they weren't going to do monetary policy the way that the former US central bank did. You know, then it was heterodox. That's what they came up with. And this time around, they said, look, you know what, we're going back to the old ways, how monetary policy is done. And if you're going to do monetary policy that way, then you're going to keep interest rates at a level that is higher than inflation. Now, the other thing we're also dealing with was FX. So you wanted FX stability in an environment where you had FX volatility. And of course, FX volatility was because foreign investors discern a lot. So they say, look, your inflation numbers are going up. Yeah. Your interest rates are pretty low. So why should I bring my money in here? So what do you do as a central bank? You go back to orthodox policy, which means your interest rate has to be higher than your inflation rate.
Yes.
Or at least tracking inflation numbers. And so that's why we've seen this hawkish monetary policy for the last 5 years. And so that's what has been happening. So now, what that then meant was foreign investors now have some confidence in the way that your monetary policy is being handled. And so you're seeing FX inflows into the economy. Today, we're seeing $42 billion in external reserves, which we like, even though some of us will say, well, it's hot money, not the kind of money that we're looking for. But you know what? Hot money needs to come in first before it paves the way for cooler money, if I can use that word. So that's what you've seen. Now, you've also now started seeing inflation numbers trending down, at least at the macro level. A lot of us probably don't feel it yet, right? But at the macro levels, you're seeing inflation numbers go down. So what the central bank is now doing is responding to that slowdown or that reduction, that slowdown in inflation numbers that you're seeing. And so that's why you've seen that 50% basis cut. Some people actually think that you could even see 100% basis cut the next time they meet, because now it's time to see aggressive reduction. It's not only happening in Nigeria, it's happening outside Nigeria as well. The US also just recently, cut rates. The EU has also cut rates. UK has also cut rates. So this is a trend that you're seeing across the world. And we're now gradually moving from hawkish monetary policy to a policy where you see rates and central banks start to think about how do you now start to engineer growth. You need to engineer growth, man. You need to reward the economy. You know, economy has to work, call up the wheels. Zenith Bank, the country's largest lender, 1 naira 25 kobo per share across its issued shareholders. Now, this amounts to about 51.34 billion naira. Yeah. What does this mean? Resilience on the side of the banks. Yeah, you know, for some of us, even those of us who are shareholders of Zenith, it was a pleasant surprise. I can use that word. Yeah, because a few months ago, we were all worried that banks might not pay dividend because of forbearance, right? Yeah. So the central bank has said, look, if you don't sort out, you know, your issues, then you can't pay dividend. And it kind of made sense because what's the point paying dividend when you're still carrying loans that the central bank wants you to provide for prudential reasons? And so what you've then seen is some banks say, you know what, we will bite the bullet early enough. Let's just get that out of the way and then go ahead and then move forward as it should be. But surprisingly, some of us thought that, dividend payment will probably come, next year, so based on full year numbers. But to my surprise, and like I said, pleasant surprise, Zenith Bank is doing not just paying one Naira 25 kobo in dividend, 25% higher than they did last year, too. So as a shareholder, you're like, hey, wait a minute.
What's happening?
You mean that you've been able to bite this bullet and you're still able to pay dividend? Perhaps suggest how resilient some of these banks are, at least within the macroeconomic environment that we find ourselves in today.
And it's a time where we're also talking about recapitalization. At the last MPC, the CBN governor formed about 14 banks, I guess he says.
Yeah.
What does this also say, looking at this same results?
Yeah, I mean, they didn't mention the banks, but we do know Zenith is one of those banks,
yeah,
since we were talking about Zenith, that have met that recapitalization and target. And I think it also shows investor confidence in the banking sector. Now, let's remember that banks are coming on the back of superb 2023 full-year profits, of course, underpinned by exchange rate gains. And they're also operating in an environment where interest rates have been pretty high. So banks tend to do well when interest rates are high, particularly interest rates for fixed income securities like treasury bills or FGN bonds. And so for these banks, they are in a very good sweet spot for investors. So the fact that they are able to mop up this much, over 4 trillion, that's the minimum that we expect banks to raise to meet the central bank's recapitalization deadline. And so the fact that you're seeing 14 banks already meeting that, including those that probably have met it before even the recapitalization, just shows how also resilient or how much cash you have in the economy. Central Bank, if you look at central bank money supply data, it tells you about over 110 trillion in money supply in the country. So there's so much money to mop up, and it all feeds into CBN's strategy of trying to mop money out of money supply in areas where they probably feel is not productive, and then move them to areas that are productive. So this is the first step in doing that. So now that banks have mopped up this much cash, my expectation is that next year, you're going to see it all lending. And to your previous guest, manufacturers now say, okay, you know what, we've gone through all this pain. We've gone through interest rates at 30-35%.
Yeah.
You guys have mopped up all this cash. You better start lending to us now.
Indeed, and at a very good rate. You know what I mean? It's actually a relief for investors. I'm looking at how investors will feel now, because of the worry that that they felt earlier, like we talked about the forbearance and all of that. Yeah. And considering regulatory pressure and macroeconomic uncertainties, how do you think the banks were also able to wade through all of that?
Yeah, I think it was a combination of policy and I don't know what to call it, luck, or maybe timing. In an environment where you've seen so much policy changes that has led to massive devaluation of your exchange rate and increase in interest rates, it somehow kind of played into the hands of banks. Now, let's flash back. What had happened before 2023? You saw a lot of banks basically move into global markets to try and raise capital. And some of the capital that they've raised, which is quasi-equity, some loans, were in foreign currency. And some of those monies, they've basically also lent in foreign currency as well. And so what you see happen is that for a lot of those banks, the moment you devalued or you moved into a more flexible exchange rate, their balance sheet essentially ballooned. And a lot of that ballooning is in profits, real profits. And so for those banks, it worked in their favor. Now, the fact that you're also operating at a high interest rate environment also played in the favor of those banks as well. Because the interesting thing about how interest rate economics works is lending rates tend to move way faster than savings deposit rates. So for banks, as much as their cost of funds were going up, it wasn't going up at a faster pace compared to their lending rate. And then banks are also, a lot of the loans that they also had, that they had given out years before, they also had to reprice at a higher interest rate. So borrowers are now finding themselves paying at a higher interest rate. And then to make it even better, government, which is now perhaps the largest single borrower within this ecosystem of the economy we call Nigeria are also borrowing at interest rates that we haven't seen before in this country. So you're seeing treasury bills rate at some point 28, 29%. You're seeing Omo bills rate at that level as well. You're even seeing FGM bonds at 20%. And so for a lot of banks, these are also areas where they put some of their money in. Now, you might say, well, for banks, it's a lot of profit. Yes, it is a lot of profit for banks. But on the flip side as well, remember that it's also depositors' money. So you also want depositors' money going into areas that are protected, because you can't be lending to the real sector at those rates without, thinking that there might be losses down the road, because a lot of those companies will not be able to pay. And so that's sort of the balance that we're seeing, and that's why you're seeing banks make so much money.
Again, Zenith explained that the dividend is subject to ratification by shareholders and would be paid from its retained earnings. Yeah. That is also something that I will make our viewers understand.
Yeah, so companies in Nigeria, in fact, most parts of the world, particularly in Nigeria, based on Nigerian laws, are only allowed to pay dividend out of their retained earnings. So retained earnings is basically the amount of profits that you've made over the years and in the current year that you've retained in your books, not losses. So companies have accumulated losses or retained earnings. So for banks and most companies, you have retained earnings. So now, companies are allowed to pay dividends out of those retained earnings. So Zenith Bank has a very solid retained earnings. Now, what is also very interesting with Zenith and most other banks, including UBA, GT Bank, particularly the Fugas, is the recapitalization that they are doing today does not include retained earnings. So the CBN basically said, you know what, leave retained earnings out of this, just raise ordinary share capital. So that then means banks actually have a whole lot of money with them that the CBN probably does not even regard that much. So for a lot of these banks, why hold that money to yourself when you can basically pay it back, give it back to your shareholders so that they can use it and probably reinvest in that company again or reinvest elsewhere. So that's basically how, that's why banks are paying dividends out of it. And as you can see, most of them are all paying dividends.
They are all paying. It's really a good time, I must say. Looking forward, boosting confidence in the financial system, this gives that sense of stability in Nigeria's banking system. What do you make of that? There was, of course, fears at a particular time. But in your thoughts, what do you make of the level of stability in our entire banking system?
Well, there are challenges. Let's make no mistakes about it, and that's why you're seeing the recapitalization happen. There were a lot of things that happened in the last 5 years that were a huge challenge, from COVID-19 and the impact it's had on the macroeconomy and on businesses, to a lot of the corruption that's happened in the oil and gas space that has actually led to some of the provisioning that banks are going through. Exposures and all that. Capital adequacy ratios of banks have been challenged. NPL ratios of banks have breached, normal limits. So there are issues, and that's why you've seen this recapitalization thing happen at the moment, because the central bank knows that, look, as much as these banks are making a lot of money, they do actually need to strengthen their balance sheet. And 500 billion of today, so it's not the same as 500 billion of 3 or 4 or 5 years ago. And so it's a different environment now. So for a lot of these banks, yes, it is good that they are making this profit, because I know sometimes we tend to say, look, how come banks are making a lot of money and the real sector is not? But it's important that banks do make money, because what we don't want is bank collapsing, right? We don't want to see bank collapses here. So we want to see stronger banks, because when you have stronger banks, then they can support economic growth at some point. And like I said, with all this money that they've raised, there's no other choice. You've got to be able to support economic growth, because the sort of high interest rate that you're seeing now, you're not going to see it next year. You're not going to see treasury bills at 20%. You're not going to see FGM bonds at 20%. So at some point, banks will have to deploy that capital into the real sector, into SMEs, into the businesses that we actually need to grow and create jobs for Nigeria. So it is important that you have financial stability underpinned by stronger banks, and that's what you're going to see. I suspect that you could see mergers at some point down the road, likely to see that, yes. Or if you don't see mergers, you're probably going to see banks that will play at different levels in the economy. So it is important that we have stronger banks if you want this economy to grow. And that is why you're seeing a lot of the movements, a lot of the activities. You're seeing a very, very busy central bank. I kind of feel like next year for the central bank, a lot of the attention might move away from monetary policy to actually banking supervision and actually ensuring that banks are supporting the economy, because that's what this economy needs now.
Indeed, for us to be able to grow as expected. Well, finally, what will be your outlook for the entire banking system and maybe the economy itself? It's the last quarter.
Yeah, it's the last quarter. I think we've seen GDP at, was it about 4.3 or so percent? So that sort of growth you would see, not enough for a lot of Nigerians to feel it yet. I've always said that you want to see GDP growth rate at the higher single digit, 7, 8, 9%. For people to start to feel like, okay, they're in an economy that is inclusive, exactly. Yeah. So right now, this is an economic growth that is for the 1% of Nigerians. So you need to see the economy grow faster. My outlook is that you continue to see prices go, start to fall. Of course, it's very important. One of the most important elements of this is energy security. That's why we have one eye at what's happening with Dangote Refinery and the unions and all of that. That whole mess needs to be sorted out because energy security is very important in this country. Power issues also need to be sorted out. These are going to be the drive. These are the layers that you need to take us to that 7, 8% growth. The central bank and the financial service sector can do all it wants to do. So if you don't fix some of those bottlenecks, including customs and some of these things that you mentioned earlier in your show as well. So those are the things that I feel are going to be the next drivers. For now, a lot of things seem to be in motion. Another big fear, of course, is next year is like going to be election campaigning year as well. And you do know that
it's a fear.
From the second half of the year, there's nothing. Like everything is basically on stand. So we basically have 2 quarters to try and get things moving. Last quarter of this year and first quarter of next year. So if things fall in place, right, then you would see the economy. And there's a lot of things that's going to happen. You've seen the Naira has been signed as in Nigerian insurance. That one is there to drive the economy. You've seen SEC as well. Yeah, SEC as well also has a new act. So that's also driving things. You've seen taxes as well. So there are a number of things that has happened on the policy level that we need to start to see the impact. What does this all mean for Nigerians in general, and how would this drive growth? So bringing all these things together, if I want to be optimistic, you could be seeing economic growth closer to 6% by the first quarter of next year. But I mean, if these things don't work out, we're just going to be stagnant, and that will be really bad for 2026. So
just in 30 seconds, do you think the MPC will shift again in November?
Of course.
You're sure?
Yes, they will shift.
All right, we'll talk about this after that.
Definitely.
All right, Ugodre Obichukwu is Chief Executive Officer, Nairametrics, been making sense of the 4 banks that have paid 135 billion naira as dividends, and of course, issues around the Nigerian banking and financial space. Thank you so much for coming in. It's good to see you. Thank you so much. All right, then it's time to let's review trading activities at the Nigerian